Hi, it's Ali here from TSC. Now, I've been threatening to do a market update for a while now, and I thought now would be an appropriate time because obviously we had some big moves last week. So what I want to do in this video is give you an update on where I see the markets currently and look at the main indices and a couple of the major currencies as well. But importantly, I want to show you when we get there why on this occasion we haven't actually profited from the big moves on the main indices. So I'm going to show you why last time we did, but this time we haven't, because it's very important when you're trading that you follow a plan rather than just jump on a market because there's potential doom and gloom or a big sell-off. So I'm going to show you that. But firstly, the reason why I haven't actually been able to get or haven't got around to doing some of these videos is because we've been doing a huge amount with TSC. We are now running regular Kickstart events, and these events are for free members. They're for anybody that's got experience or even people who are completely new to trading. So we've started running these as a way of getting people focusing on what we call the 4 pillars of trading. We essentially have 4 pillars that we get people to work on. So we've been doing that, and we've been automating some of our entries. We've been adding more to our Telegram groups for our paid members. So we've been very busy on that, but I do want to get more of these videos out. Now, I'm not going to promise once a week, but at least once a month I will get a market review, and I will give you some live trade updates in there as well. So you'll actually see some of the live trades that we've been doing. So, all right. So we won't start with gold. We'll go straight to the S&P because the S&P is telling us a lot at the moment. And there's last week on the daily chart, you can see the big move down. Started with a bit of a move the week before, then a gap, then we came down. But I want to take you up to the monthly chart to give you a little bit of perspective on what is going on. Because if you listen to the media, they'll be turning around and saying that it's, you know, the worst move since 2008 or the worst week or whatever it is. But, you know, it wasn't that long ago. If you look back here, if we look at it in relative terms, in terms of a month, you can see back here, December 2018 was a fairly big month down, bit more of a reaction back up. But you can see here we pushed up, came down, and it's been still a fairly big range on Feb. But to put things into a little bit of perspective, I just want to show you what I'm seeing here. So last time what we had with the S&P, and I'm up on the monthly, is look, essentially we had a retest of those highs. Then this move down here got us down to the 50 moving average. So that's the monthly 50 MA. But you'll notice that this downward move currently has got down to the monthly 21. Now, we have seen a bit of reaction. We were a little bit higher this morning, as you can see, as we've gone into March. And we'll look at that in a bit more detail in a second. So we have had a bit of a reaction. Now, there's no guarantee that because we're at the 21, we're going to bounce from there. It's just a reaction at the moment. But obviously, because we've gone higher, any retest of the monthly 50 will probably result in a bigger move. But what you have to bear in mind is that that move isn't that much different at the moment in terms of distance. So we'll have to see what happens there. If we go down and look at it on a slightly lower time frame, so we'll go down and have a look at it on the weekly, you can see very much like before, we got a test and a weekly close below the weekly 50. And when the same thing happened here, we had a retracement and then price rolled over. Now, again, I'm not saying that would happen here, but any sort of retest of a move back up towards the 50, possibly even the weekly 21, and then a rollover could mean we're going to actually get down and get in and test the levels that you can see. I'm just going to delete that line for now. Get in and test those levels, which would be a fairly significant downward move. And obviously you've got the different psychological levels. You've got 2,500 in and around that level. So it could be the price wants to get down and retest the 2018 lows that you can see in there. Now, as I said, at the moment, what we're seeing is we're seeing a little bit of a reaction. So we had the indecision on Friday, broke the high on there, and really the market's not really making up its mind. So a little bit of short-term support, but again, it's a bit vague from back in August. A bit of short-term support in here. Price reacting to the lows of October, but as yet we're not sure. So for me, what I'm going to be doing is keeping an eye, not too much on the daily, but more on the weekly, and seeing whether or not price is actually going to go up and put in a solid retest of the 50. Or even get up to the trend line. But at the moment, it's fairly neutral. Yes, we've had this move down, but I'm certainly not selling off. And as I said earlier in the video, if you actually look, we've actually not had any short trades here, and there's a couple of reasons why. Because last time when we were able to capitalize from the move down in September, we had a move in here. So we capitalized on this on a couple of occasions. And it's partly because taking a reversal trade for us, we need the previous resistance, which we had there. So we had a combination of a reversal trade in here against the trend, and then the move down below the weekly 50 in the close. And then it was the retraces that you can see here that allowed us to capitalize on chunks of this move. The challenge that we've had here is there is no previous resistance for us to get in, and it all looks so obvious after the event, doesn't it? Oh, well, it's gapped, you need to go short. People come out with all sorts of crap about jumping in on the move once they see the benefit of the move, or they see the result of the move afterwards. But if you actually look at this very clearly, there was no previous resistance. So there was no previous resistance like there was here. So there was no reversal trade for us. And then the move down has been so big that we haven't been able to get in because there hasn't been a clear retracement that fits our strategy criteria. But if price does retrace from where we are, we may get further setups here. If price decides to go a little bit lower and just push down and we get a certain type of consolidation in this level, there may be short opportunities from there. So for me, it's not about jumping on the market just because the news is saying that the markets are going to crash and there's no end in sight for the virus and all of these different things. That's not why I'm trading it. Even if I see a move, I've still got to see the relevant setup for me to actually get in. So this is why this period here, when we last saw the main indices was down, the S&P moved down, this was very profitable for us. But this so far, we haven't actually had an opportunity. And I'm okay with that because I would rather stick to my rules. But what we have had is we've seen a weakening in the dollar index and a strengthening with the euro index. So if I just show you euro US dollar, what you've seen, and this is the weekly chart, is nothing like the downward move. So it's not it's not inversely correlated. It's not anywhere near as big, but we've had a big up week, whereas the main indices have a big down week, and price has been pushing on. And then what that's allowed us to do is we've had a couple of setups. Euro pound, as you can see here. Well, if I just show you pound US dollar, you can see pound US dollar has had a bit of a weakening. Euro US dollar has had a strengthening, and that wasn't the reason we jumped in long on euro pound, but what you'll see on this weekly chart is we had a nice area of support right in this area here, and then we've had a retest. We had a trade earlier on in the year, and then we were able to get in on another reversal trade here. And a lot of people say counter trend trading is risky. I would disagree. If you're doing it correctly and and you've got a proven strategy, it can be very, very profitable. In fact, I only trade as a swing trader reversal or against the trend trades. So if I just show you this, now this has actually marched on way past our target. So, but you can see here on this one, if you look through, this euro pound trade was the move, and that's still euro pound. Now we've marched on past our target. We just clipped our target on Friday. I'll show you this on the other chart. So if I show you the 4 hour, so we just clipped our target on Friday. We came back down, a little move, and as you can see, we're pushing back on. But I'm happy with that because we managed to get a nice 3-to-1 on that trade. And it took a little while. We had to sit in it for a while, but then as you can see, it moved. And one of the skills as a swing trader is you don't actually know when your swing trade is going to hit its target or going to hit its stop. So one last thing I want to show you, interesting one here on gold. So if I show you that's the 4 hour, we'll go up to the daily here. So you can see here on gold had a downward day on Friday. Some of the indices were a bit indecisive around Friday. Gold actually put in a downward day, but this has had a new high. Now at the moment, what we're seeing, price pushing higher, nice little pullback here. So some of our swing traders who trade with the trend will be looking at a gold position and a possible trade tonight. And with plenty of room to the upside, gold has the potential to at least retest those highs before getting in and around the 1800 mark, which is the next significant high. So there's plenty of clean air on gold. But again, I'm not just jumping in on gold because I think the indices are going to fall further or start trying to use some rationale like people are going to buy gold because of all the panic that's going on with coronavirus. That's not what I'm doing here. What I'm focusing on is a specific setup if that setup comes along. Good. So I'm going to leave it there. So I'll try and get back with you in the next couple of weeks, give you an update, show you some of the other trades. I've got quite a few possible trades lining up at the moment. This is my actual list. So if those come about, we'll trade those and I'll let you know the results. You can see them. Don't forget, with me, you're going to actually see the trade. You'll see the account. What I won't be doing is saying I got in here and then I got out here and made 20% and all of that crap. If I'm in a trade and it was a profitable trade, you'll see it. If I didn't take a trade or I took a trade and it lost, you'll see that as well. So I'll try and give you some summaries of the good and the bad trades that, well, the winners and the losers, not necessarily the good and the bad. Because for me, if the trade meets its criteria set up and the conditions are good, then it's a good trade. All right, so we'll try and keep some updates coming along, but do keep an eye on our Facebook page, keep an eye on what we're doing, and look out for our not only our socials. We've got a social coming up in April in London, but some of the other live events that we're going to be doing. Trade safe, and I'll catch up with you soon.